Did you know that every single year, Australians just leave billions of dollars of their own money sitting on the table, completely untouched? Today, we're going to uncover the government benefits and wealth schemes that you might be overlooking. And the big question is, are you one of them?
I know, it sounds pretty unbelievable, right? But it is absolutely true. Billions of dollars in government support goes completely unclaimed. And look, this isn't some complex loophole for the super rich. This is money that's been specifically set aside for people like students, families, and retirees. It's just sitting there, waiting for you to claim it.
So I really want you to keep this question in the back of your mind as we go through this. Could you be missing out on money that you are completely entitled to just because you don't even know it exists? Well, let's find out.
Okay, so let's start right at the beginning of the financial journey. Whether you're just kicking off your career, still studying, or maybe you're starting to dream about that first home, there are some really powerful schemes designed specifically to give you a leg up.
First up, this is huge news for anyone with a student loan. That 20%? Well, starting June 1st, 2025, that's roughly how much HELP or HECS debt is going to be wiped as part of a major indexation credit. And the best part? You don't have to lift a finger. No forms, no applications. It just happens, automatically. Let's be honest, saving for a first home can feel like climbing a mountain. Well, the First Home Super Saver Scheme is basically designed to give you a shortcut. It lets you use your superannuation account as this high-growth, low-tax savings vehicle for your deposit, which can get you into the property market a whole lot sooner.
And the boost this thing provides is massive. You can put extra money into your super and then pull out up to $50,000 plus all the investment earnings it made along the way to put straight towards that first home. It is a huge advantage for building your deposit. Now, if you're on a lower income, there are two amazing ways to boost your super. First, the government co-contribution. You put $1,000 of your after-tax money into your super, and the government just adds a $500 bonus. I mean, that's a guaranteed 50% return. And even simpler is Listo. If you earn under 37 grand, the government automatically refunds up to $500 of the tax paid on your super contributions straight back into your account.
This next one is like a 2-for-1 deal. First off, the government might pay for up to a quarter of your private health insurance premium, which is a great saving right there. But, and this is just as important, if you're a single person earning over $90,000, having that insurance helps you avoid the extra medical levy surcharge. That can be a really significant tax saving. All right, let's shift gears and talk about the next major life stage, starting a family. The cost can feel pretty daunting, but you know what? There's a real safety net of support designed to ease that financial pressure.
The family tax benefit is really the cornerstone of this support system. It's an income-tested payment designed specifically to help with the day-to-day costs of raising kids. For eligible families, we're talking over $2,000 per child every single year, and that really adds up.
Okay, this number is an absolute game changer for working parents. The child care subsidy can cover up to 90% of child care fees. Yep, you heard that right, 90%. Now, it is income tested, but for a huge number of families, this subsidy is the key that makes returning to the workforce actually financially possible.
The support for new parents has also gotten a lot more flexible. The government now funds up to 20 weeks of leave, paid at the national minimum wage. But the biggest change is that this leave is now completely shareable, so parents can decide for themselves how to split the time in a way that works best for their family.
Now let's look towards the finish line. As you get closer to retirement, the focus obviously shifts to maximizing your savings and making sure you have a comfortable income. And the government has some incredibly powerful schemes for this exact phase of life.
This scheme is a unique way to seriously supercharge your retirement savings. If you're over 55 and you sell the family home, the downsizer contribution lets you move a huge chunk of the sale price directly into your super fund, and you get to bypass a lot of the usual rules and restrictions.
And the amount you can move is substantial. We're talking up to $300,000 per person. So for a couple, that means you could potentially shift $600,000 from your home sale into the low-tax super environment to fund your retirement. It's an unbelievably effective strategy.
Okay, SEPTO. It's got a complicated name, the Seniors and Pensioners Tax Offset. but it's one of the most valuable and most overlooked benefits for retirees. Basically, it's a special offset that dramatically increases how much you can earn before you pay a single cent of income tax. A single retiree, for example, can earn around $33,000 completely tax-free.
And of course, there's the age pension, which is the foundational safety net for so many people. For a couple that's eligible, this can provide up to nearly $44,000 a year. But it's not just about the cash. Getting the pension also unlocks a huge range of valuable concessions on things like healthcare, energy bills, and transport.
Okay, let's just quickly touch on 2 more advanced rules, including a really key update for 2025 that are important for you to have on your radar.
Here's a rule that surprises a lot of people. If you own Australian shares, you know those franking credits that come with dividends? Well, they can actually result in a direct cash refund from the tax office. For retirees on a low income who don't pay any tax, this can become a fantastic source of extra cash flow.
You've probably heard about this new super tax, so let's be really clear about it. The most important thing to know is that this only affects a tiny fraction of people. This new 15% tax on investment earnings only applies to the portion of a super balance that is over $3 million. For the vast majority of Australians, this change will have absolutely no impact at all.
So, we have covered a lot of ground, from your very first job all the way to retirement. Let's pull it all together into a simple summary so you can see exactly what you might be entitled to.
Okay, think of this as your personal cheat sheet. Are you a first home buyer? You need to look at the FHSS. A low-income earner, the co-contribution is literally a 50% bonus on your money. Are you a parent? The child care subsidy could cover up to 90% of your costs. Selling your home after 55? The downsizer scheme is for you. This table lays out the opportunities at every stage of life.
So there you have it. We've laid it all out. The support is there, the money is available, and now you actually know where to look. So the only question left is, which one of these benefits will you investigate first to start building a better financial future?